Here's a quick question. What do these things have in common? Writing a symphony, brewing beer, flipping burgers, designing handheld furniture, and passing the bar exam. The answer? They've all been successfully accomplished by AI technology this year. Pretty amazing. As we kick off our latest market update, we certainly have AI on the brain, and we will discuss how we're investing in it for our clients in a short bit. But first, let's summarize what we saw this year, take a glance at what's coming in 24, and then finish off with key opportunities on the horizon, AI included. First, let's talk about 23 with a specific reference to the S&P 500. This year has been a typical year in the late cycle. A lot of up and a lot of down, landing in the same place. Inflation is being stubborn, and some days it feels like Groundhog's Day. We also have what we call a tale of two cities, one with 7 residents and the other with 493. You may be aware that the S&P 500 consists of the 500 largest companies listed on the US stock exchange. What you may not know is that year-to-date through Q3, the average unweighted return of those 493 companies is just under 3%. When meanwhile, the average return of the remaining 7, up 87%. If your investments were not exclusively in these select stocks, you probably trailed the index. And yes, while that strategy worked for 23 so far, too heavy of a concentration in those stocks is not what you want long-term from a diversification and asset allocation perspective. So now, let's take a look at what's ahead in 24. At some point next year, we expect the recession phase will officially start. Late cycle turns into recession phase and then is followed by the recovery phase. When people think recession, they think market losses, but that always isn't the case. If you'll recall, the market is always looking ahead 1 to 2 years. We believe that the market saw a recession coming and has already accounted for it with the difficult markets we saw in 22. We expect this recession will be milder than the ones etched in our memory over the last 23 years. In fact, historically, mild recessions are much more common than the big crashes we have experienced like the COVID pandemic, the 08-09 financial crisis, and the dot-com bust. The thought of a recession may seem daunting, but keep in mind, both from a historical and a glass is half full perspective, a recession is always followed by a recovery phase. Historically, recoveries see a reduction in interest rates, which spurs activity, businesses can borrow and grow, consumers are more likely to spend money, cash earns less, so people want to use it to invest again. The recovery phase has historically produced the best returns of any phase of the business cycle, and that will be just around the corner. So now that we've discussed the recovery, let's take a look at the opportunities it presents. Many believe that artificial intelligence will be among the most significant technological advancements of our lifetime. Let that sink in. We've had some pretty good ones the last 20 years. Bill Gates even said, AI is as fundamental as the creation of the microprocessor, the personal computer, and the internet. Wow. AI is poised for unprecedented growth. Its market is projected to reach a staggering $407 billion by 2027, after an estimated $87 billion in revenue last year. Among the fascinating trends we see with AI is its incredible speed of adoption and variance in use across so many industries. In simpler terms, fast growth and widespread adoption. ChatGPT, likely the most famous consumer-use AI tool, garnered 1 million users in the first 5 days of its release, and 100 million in the first 2 months. That's incredible. That's more than double the adoption rate of both tablets and smartphones. And businesses are buying into it. A significant 64% of businesses believe that artificial intelligence will help increase their overall productivity, with significant applications growing for healthcare, manufacturing, hospitality, IT services, and more. Even small businesses have adopted, with 91% of small business owners using AI saying it has already made their companies more successful. We believe that companies and industries that are quickest to adopt AI into their business model will achieve efficiencies and profitability inconceivable previously and will be a catalyst for the next bull market. That's why we are currently investing in AI through industry leaders like Google, Microsoft, and Meta. We're also taking it one step further by investing in the companies that make the chips that power nearly every major AI program. So that's our update on equities. But where do we stand with bonds? That one's pretty simple, as we feel we are in the same place we were last time we provided our market update in April. To summarize, we think that bonds are poised for a nice year in 2024, especially if interest rates drop. I would recommend you check out our spring update for a full review on bonds and what to expect. Thank you for taking the time to catch up with us, and we hope that this gives you some valuable insight. To stay up to date on the latest research, be sure to follow us on social media or register to receive our weekly market commentary every Wednesday. As always, stay strong, stay smart. Until next time.